Welcome to The Explainer. You know all that noise in the financial markets? Today, we're going to cut right through it. We're taking just one single, kind of chaotic day of data, and we're going to find the hidden story that connects everything. All right, let's jump in. You see these headlines every single day, right? Stocks are down, oil is up, this tech company slummed. It's just a jumble of numbers and trends. It can feel, well, totally overwhelming. It's this constant stream of information, but what does it actually mean? What's the real story here? So that's exactly what we're going to do. Think of it like a snapshot. We're going to take one day's market activity, we're going to break it all down, and we'll start to see how it all connects. I promise, by the end of this, you'll see the clear picture that was hiding behind all that chaos. All right, so where do we start? We're going to start at the very foundation of the economy. We're talking about commodities. The raw materials, the stuff that gets dug up, grown, and pumped out of the ground. The prices of these things tell us a really fundamental story about global supply and demand. Okay, first up, let's look at energy. WTI crude oil. It settled at $66.19 a barrel. And then you've got gold. That classic safe haven asset people flock to when they're nervous. It settled at a pretty hefty $3,367.17 an ounce. But, it's never quite that simple, is it? When you look a little closer, it's really a mixed bag. You've got natural gas down, but industrial metals like copper are up. Coffee prices, they went up. Soybeans, they fell. See, every single one of these moves tells its own little story about what's happening with specific supply chains and demand all over the world. Okay, so now let's try to connect those dots. How do these raw material prices feed into what's happening in the broader stock market? Well, on this particular day, the dominant color was definitely red. So, why? What was behind the big sell-off? The headlines made it pretty clear. The big market indexes, the S&P 500 and the Dow, which together represent a massive slice of the U.S. economy, they both ended the day in the red. It was a really broad decline, affecting a lot of companies. But here's the thing. It wasn't just random. Nope, not random at all. You could trace this downturn to a few key culprits. There were these lingering worries about tariffs and what they'd do to the economy. We had a pretty weak jobs report that came out the week before. And on top of all that, there was a big sell-off happening specifically in the tech sector, which, as you know, had been carrying the market for a while. So to really get a handle on that tech sell-off, let's zoom in a bit. Let's look at one of the most talked about companies on the planet right now, the chipmaker NVIDIA. This is a perfect case study for seeing how all these big market forces actually play out for a single company. This brings up a classic question, right? Can one single, super influential company actually drag the whole market down with it? When a giant like NVIDIA stumbles, you'd expect the ripple effects to be massive. So, was that what happened here? Let's dig into the data. So, NVIDIA's stock, it did fall. It dropped by 1% on the day. But, and this is a big but, that is not the whole story. Not even close. See, this is where context is everything. NVIDIA's 1% dip, it wasn't happening in a vacuum. It was actually part of a much bigger sell-off across the entire tech sector. And it was all being driven by those same big-picture macroeconomic concerns. Yep, the tariffs and the jobs data that were weighing on the entire market. So the analysis basically confirms it. NVIDIA wasn't the big bad wolf pulling the market down. It was more like it was caught in the same strong current as everybody else. It just goes to show you, even the biggest, most powerful corporate giants are still at the mercy of the powerful tides of the overall economy. Okay, so that was yesterday's story. But the thing about the market is, the narrative gets a complete rewrite every single day. So now let's look ahead. What are the key data points that are going to write the next chapter of this story? Yeah. If you really want to understand the market, you have to track this constant flow of new information. Yesterday's news set the stage. Today's data, that's going to give us the new plot points. So here's what you need to be watching. A huge piece of the puzzle is always corporate earnings. And today, we're getting reports from some absolute giants: Disney, Uber, Shopify, Sony. How these companies actually performed, and more importantly, what they predict for the future, that's going to send some major signals to investors everywhere. And it's not just about companies. We also have key data coming from the government. The Global Supply Chain Pressure Index, for instance.
That's going to tell us if things are getting unclogged or if it's getting even harder to move stuff around the world. Then there's the New York Fed's Nowcast, which is cool. It gives us a real-time estimate of economic growth. Think of these as the vital signs for the whole economy.
And really, this is the main takeaway. It all connects. The price of oil, the mood in the tech sector, the earnings of one company in California, those upcoming government reports, they are not separate stories. They're all just interconnected threads in one massive, complex, global story. And so that brings us to the final question. And this one's for you. You've got the framework now. You know what data is about to drop. So, what do you think happens next? Where does this story go from here? Thanks for joining me on The Explainer.